All right, let's dive into this AI-powered finance with FinCon. So imagine a system that doesn't just work with numbers, but it actually learns
Hmm.
from market trends, adapts to new information, and then makes decisions about investments, intelligent ones. That's FinCon in a nutshell. It's like having a whole team of financial experts working for you,
Yeah.
300/4/7.
What I think is really fascinating about FinCon is how it mirrors a real investment firm, but in a digital environment.
Yeah.
Completely digital. It's built with a hierarchical structure, much like a company.
So instead of people huddled around a water cooler, you have these digital agents with their own specializations.
Exactly. Yeah. You've got analyst agents, laser focused on specific data. Some are, glued to the news. Others are dissecting company reports. And some are even analyzing the tone of voice in earnings calls. Apparently, a CEO's tone can tell you a lot about the company's prospects, future prospects.
Like reading between the lines. So who's making the decisions with all this information coming in?
So that's where the manager agent comes in. You can think of it as like the head honcho, the one making the final decision, based on what all the analysts are saying.
Okay, so we've got this team of digital analysts feeding all this info to a manager agent who's making trades. But what's to stop them from, going rogue, making a risky bet? It's the stock market. It can be volatile.
Right. Well, that's where FinCon's dual-level risk control system comes in. It's like having two things, a safety net and a guardian angel watching over your investments.
I like it. Double the protection. So how do these safeguards work?
Well, the first level is called within-episode risk control. It's always on guard, during training and real-time trading. It uses something called conditional value at risk. You can call it CVRR. Imagine like a
Right,
crystal ball. That shows you the worst case scenario, the bottom 1% of possible profits and losses daily. That's CVRR.
So it's
You get that
for
down.
problems, right? And warning the manager agent if things are getting a little.
Exactly, like tapping the brakes. When you see a hazard on the road, it's preventing the system from making a rash decision because of a sudden market fluctuation. Now, the second level of risk control, this is called over-episode risk control, focuses on the long game.
Okay, so the first is immediate safety. And this is learning from past experiences.
Yes, this level is only active during training. It uses something called conceptual verbal reinforcement, CVRF. Think of it like a coach, analyzing game footage. It looks at past successes and failures. It helps the manager agent refine its understanding of the market so it can make better decisions in the future.
This is starting to sound very human-like, learning, adapting, and analyzing. But I'm guessing FinCon isn't just born with this knowledge. What kind of training goes into creating this financial mastermind?
Yeah. FinCon's secret weapon is data. It's trained on an enormous amount of
Okay.
real-world financial information. From January 3, 2022 to June 10th, 2023. This was a period of, serious market ups and downs, so it's been battle-tested.
It's seen it all, huh? The best and the worst. So what kind of data are we talking about here?
Well, everything from the basics, like stock prices and daily financial news, to those, dense company filings, the 10Ks and 10Qs. It even analyzes earnings conference call recordings. Remember what we said about tone of voice? FinCon is picking up on all those subtle cues.
Developing a sixth sense based on hard data. So we've got the sophisticated AI trained on mountains of data, equipped with these risk control mechanisms. But the big question is, does it work?
That is the million-dollar question. And the answer is yes, it does. In tests, FinCon consistently outperforms other AI trading models, even those using the same technology as ChatGPT. It beats traditional methods like buy and hold, and even more complex models based on deep reinforcement learning.
Wait, hold on. So you're saying this AI can outperform seasoned traders and even those complex algorithms. What's the secret?
Well, FinCon's strength lies in its combination of its multi-agent structure and the dual-level risk control. Let's break down the agents a bit. Each one, the manager and the analyst, has 4 key modules: a general configuration module, a perception module, a memory module, and an action module.
Okay, so we've got these mini experts all working together. But how does the risk control actually play out?
Okay, so let's start with within-episode risk control. Remember, it relies on CVRR, which constantly monitors for those worst-case scenarios. If the CVR drops below a certain level, it's like a red flag goes up, alerting the manager agent to be extra cautious.
Okay, so no panic selling or risky bets. Got it. Now, what about the over-episode risk control? The learning aspect, how does that impact FinCon's actions?
Well, that's where CVRF comes in. By comparing highly profitable trading episodes to less profitable ones, CVRF helps FinCon identify what worked well and what didn't. It's like having a coach who analyzes your game. and points out areas for improvement.
So it's not just reacting to the market, it's actually refining its strategies based on its past performance.
Exactly. And these belief updates, or lessons learned, are shared with the relevant analyst agents, making the whole system incredibly efficient. It's all about working smarter, not harder.
All right. So we've got this, intricate system that's making waves in finance. But does it actually deliver? Does it lead to better financial decision-making?
Yeah.
Especially with something as challenging as, like, single asset trading.
Well, let's dive into that. FinCon has been put through rigorous testing, and the results are pretty impressive.
Right. Let's hear it.
They tested it on 8 different stocks and
Right.
compared its performance to other AI models, traditional methods, and even, a simple buy and hold approach.
So they really put it through its paces, huh? What happened? Did FinCon, crack under pressure?
Not at all. In fact, it thrived. It consistently beat the other approaches, achieving higher cumulative returns and something called the Sharpe error ratio.
Okay, hold on a sec. For those of us who don't speak, fluent finance, break down those metrics for us.
Sure. Cumulative return is basically the total profit you make over time, shown as a percentage. So bigger is better, obviously. Now, the Sharpe ratio is a bit more nuanced. It measures how much extra return you're getting for each unit of risk you take on. Think of it as getting the most bang for your buck, but in the investment world.
Got it. Higher Sharpe ratio, less risk for the same return. So FinCon is doing great on both fronts.
Exactly. It consistently achieved higher Sharpe ratios, meaning it delivered great returns for the level of risk involved.
That's impressive.
Yeah.
But let's talk about losses. No investment strategy is perfect.
Right. That's where max drawdown comes in, or MDD for short. It measures the biggest drop your portfolio takes, from its highest point to its lowest. So a smaller MDD means a more stable strategy. It's less prone to those big drops. Think of it as measuring how bumpy the ride is.
So how smooth was FinCon's ride?
Exceptionally smooth. It consistently had lower MDDs than the other models. It was really effective at managing risk and preventing those big losses.
Okay, so it's doing great with stocks, individual stocks. But can it handle a whole portfolio? That's got to be way more complicated.
You're right. Managing a portfolio adds a whole new level of complexity. And that's where we have to talk about AI hallucination.
Hallucination, like the AI is seeing things that aren't really there.
Well, not exactly. In this context, hallucination means the AI might generate incorrect information or just nonsensical information. It's like when your GPS tells you to drive into a lake. The information isn't based in reality.
Oh, I see. So when you're dealing with a ton of data, the AI might misinterpret something or jump to the wrong conclusion.
Exactly. But FinCon's multi-agent system, remember all those specialized agents we talked about? Well, this helps reduce that risk by dividing up the work, focusing on specific tasks. It's less likely that any single agent will, go rogue.
So it's like a team of experts double-checking each other's work.
Exactly. Plus, you have those risk control mechanisms to prevent the AI from making rash decisions based on bad information.
So how did FinCon actually do when managing a portfolio?
Well, they tested it on 2 small portfolios, and the results were really encouraging. It outperformed a traditional Markowitz portfolio, an AI model based on deep reinforcement learning, and a simple equal-weighted ETF strategy.
So it's a multi-talented system. It can handle stocks and portfolios. That's remarkable. But you mentioned challenges with larger portfolios. What are some of those?
One of the big ones is the potential for those AI hallucinations to increase. As the portfolio grows, more data, higher chance of misinterpretations.
That's like a double-edged sword.
Right.
More data can be good,
Yeah,
but it can also lead to more errors.
exactly. That's the dilemma, and it's something researchers are working on. Imagine a system that can manage huge portfolios with hundreds or even thousands of assets. That's the holy grail of AI in finance.
So there's still work to be done. But the potential is huge. Let's shift gears for a second. What does all of this mean for the future of finance, for everyday investors, and for businesses?
That's a question a lot of people are asking. On the one hand, you have the potential for greater accessibility and efficiency. Imagine a world where everyone has access to personalized investment advice powered by AI, like having a financial advisor in your pocket.
It's interesting. So it's not just about replacing human advisors. It's about making that expertise more accessible.
Exactly. And for businesses, the potential is even greater. Imagine using AI like FinCon to analyze market trends, identify new opportunities, manage risk, and even automate certain trading strategies.
It sounds like AI could really change the game for companies that want an edge.
Absolutely. Early adopters who leverage this tech we'll likely have a significant advantage.
This brings up a question I'm sure is on everyone's minds. If AI gets this good at managing finances, what happens to the humans, the traders, the advisors? Are we all going to be replaced by robots?
That's a valid concern, but it's important to remember that AI, even something as advanced as FinCon, is ultimately a tool. It's not meant to replace human judgment or intuition or creativity.
So it's more about collaboration than competition.
Exactly. I think the future of finance will be a partnership between humans and AI, each leveraging their strengths. Humans bring experience, understanding of markets, and the ability to, think outside the box. AI can offer data-driven insights, automate tasks, and identify patterns we might miss.
A powerful combination. It's about finding that sweet spot where human expertise and AI work seamlessly together.
Exactly. And that balance will keep evolving as AI advances and our understanding grows.
Okay, we've covered a lot today, from the inner workings of FinCon to its potential impact on finance. So what are some key takeaways for our listeners?
I think the most important one is AI is not science fiction anymore. It's here. It's working. And it's changing the way we invest and manage money.
And what else?
Another key point is that AI, like FinCon, isn't about replacing us. It's about empowering us, giving people and businesses the tools to make better financial decisions.
It's about working together.
Yes. And finally, it's crucial to remember that AI in finance is constantly evolving. What we see today is just the beginning.
Stay curious. Stay informed. Be ready for the exciting changes ahead. Now, before we wrap up, I have a question for our listeners. We've seen FinCon do some pretty amazing things with single stock trading and smaller portfolios. But can this type of AI be scaled up to handle those massive portfolios with hundreds or thousands of assets? Can it handle that much complexity without losing accuracy or efficiency? What do you think?
That's the big question. A real challenge for the future of this technology. Scaling up any AI system is hard, but when you're dealing with financial markets, it's a whole other level.
What are some of the hurdles that developers might face when they're trying to make FinCon work on a larger scale?
Well, one of the biggest is computing power. You need a lot of horsepower to process that much data for large portfolios. As you add more assets, the computational demands just explode.
So it's not just about getting a bigger computer.
No, it's much more complicated. You need algorithms and infrastructure that can handle the complexity and volume without, slowing down or crashing.
Like trying to run a marathon with a sprained ankle. So how do you keep the AI from getting overwhelmed?
That's where the art of AI design comes in. Developers need to find ways to filter and prioritize information, so the AI is focusing on the right things, not getting bogged down.
So it's about crunching the right numbers.
Exactly. And that requires a deep understanding of both finance and AI.
Now, thinking back to FinCon's risk control, the dual-level system, how might that need to change when you're managing these huge portfolios?
That's a great point. The within-episode risk control, the CVR system, might need to be more sensitive, more responsive, to handle the increased volatility and complexity. Imagine monitoring thousands of stocks at once. It's a lot to juggle.
And what about the over-episode risk control, the learning aspect? How does that scale?
Yeah, the CBRF mechanism might need to evolve as well, maybe incorporating more advanced pattern recognition and analysis to learn from all that data.
So scaling up isn't just about size, it's about making it smarter.
Exactly. It's a multifaceted challenge. It'll take innovation and collaboration between AI and finance experts.
Some big hurdles.
Yeah.
But the potential benefits seem enormous.
The possibilities are really transformative. Imagine AI managing vast sums of money with more efficiency, accuracy, and insight than humans ever could. Higher returns, lower risks, more stability for everyone.
That's a powerful vision. So while the journey might be challenging, it sounds like the destination is worth it.
I think so.
Well, that's all the time we have for today. I hope you found this deep dive into AI-powered finance as fascinating as we did. Until next time, stay curious and keep exploring.